So, welcome to the client tax update for the 2021 season and our tax season planning webinar. You all know who I am, but for those who may be watching this on the replay, it is a clients only webinar, but I'm Jared Rogers with Wilson Rogers and Company. And what we're going to do today is we're going to talk about this tax season specifically. We're going to talk about some of the key dates and other important information that everyone should be aware of. We will talk about our operational changes, our packages, our pricing, all of that good stuff. And as I'm sitting here dressed up like a crazy, bank robber with my 6 feet mask, yes, things are going to be a little bit different in the office this year to keep everyone safe. We do have staff in here. That's why I actually do have a mask on. Um, just trying to protect everybody. And then we're going to go over an overview of how the tax law changes may impact you for your 2020 tax filing season. As a departure from what we usually do, I will not be going into the details on, some of the itemized deductions and things like that. This year, we're going to focus a lot on the COVID related changes, and there are several, okay? And I think that that's going to be very beneficial to everyone. So that's where we're going to spend the majority of our time. All right, let's get moving. Okay, so important filing season data. So the IRS has already opened up the filing season for individual returns. They did that last Friday, February the 12th. That means that was the first day that we could file returns and get acknowledgments back of being accepted, okay? Now this is later than usual. Usually the tax season will open up approximately a week after MLK. So this is going to cause us to only have 9 weeks versus our typical 12, which means we are going to have a compressed season, okay? We do not anticipate that there's going to be an extension of the deadline like there was in 2020. That was realistically due to uncertainty from the medical field about COVID and its transmissibility. Okay, so COVID kind of started out really becoming a concern. I think here in Illinois, we went on lockdown like March 21st, March 23rd, something like that. And the IRS, along with the legislature, moved the date approximately 90 days because they say, hey, we don't know how bad this outbreak is going to be. And here we are a year later, and I'm still wearing a mask. So just know that the deadline was moved last year because most people who get their 60% of people who get their taxes done use a paid professional. And of those who use a paid professional, most of them visit face to face. Okay. We're the anomaly because we do taxes for most of you all, in other states, all sight unseen. But once again, we're an anomaly. So just know that we don't anticipate that they're going to be moving the deadline. So just plan for the April 15th deadline as usual. Now, we sent an email on January 24th with all the data that you need to file. So that was a PDF of our organizer/engagement letter. There's a link in there to the online version of that form, key dates, etc. So this is an actual copy of the email that everyone should have received. Um, Once again, it had the key dates that were in there for filing deadlines, deadlines that the first time that you could have a tax return accepted, the fact that we were doing this webinar, which all of you all apparently got, how we're going to submit tax data, which I'll go over more in the presentation, and then our office protocol. But there is something, like I said, that we are aware of. We now utilize a system. It's a CRM system, client relation management system, to handle all of the data. And we've started rolling this out, and we had mentioned it a little bit earlier. But we're realizing that that email that went out to 300, 400 something people, but the open rate is only 50%. And the reason why is because people who have Gmail accounts, we're aware that they're actually going to spam. So we're working on a process to potentially alert people when we send out emails like this webinar is being recorded, it'll go out. And when we see that it gets delivered and it's not coming through, that's it. I actually had a client call me and say, Jared, you've actually been pretty silent last year. I'm like, what are you talking about? I'm like, you mean now? Like 2021? He goes, no, I mean like last year. I didn't hear from you at all. I'm like, we sent out stuff about the webinars and all that stuff. He goes, I didn't get any of it. And that's when we started realizing in the system, it would show delivered, but it would never show opened. It was because it was going to spam. Okay. But needless to say, that email has everything you need in it. We're going to go through that here. But if you need us to resend it because it had links to it and documents in it, we can greatly do that. We can easily do that for you. We are in season hours at the office, which means we are open 9:30 a.m. to 7 p.m. Central Standard Time during the week, and 9 a.m. to 5 p.m. Central on Saturdays. We are closed on Sundays. Deadline for you to file your return or extend it, okay? And just I always want to drive home this point. Extending your tax return does not extend the time to pay a balance. If you owe, the IRS expects that on the deadline. Otherwise, they will penalize you. They'll charge you interest and penalties, okay? So the deadline to file or extend your return does not extend the deadline to pay it, okay? And those deadlines are Monday, March 15th for S corps, partnerships, and multi-member LLCs, and it is Thursday, April the 15th for individuals and C corps, okay? And then due to the fact that we get extremely busy post March 1st, everyone is encouraged to file early, and we provide some great incentives to do so in the form of our discounts. Okay. So, other important due dates. Now, this doesn't really apply to everybody, but I figured I'd mention it because it counts. Monday, March 15th is going to be the deadline for those of you who have companies that you would like to be treated as an S Corp and have that valid for 2021. Okay. So for the S Corp election to be valid for 2021, existing LLCs and C Corps with a tax year that began, on January 1st or, prior will need to file the 2553 no later than March the 15th. Anybody who starts an S Corp or a new business in 2021 basically has 2 months, 15 days from the date of their formation to file for it to be effective. All right. Um, 2 months, 15 days is, you do the math. 2 months, 15 days. That's why it's March 15th. If you want it to be effective January 1st, if you incorporate this year, 2 months, 15 days. Otherwise, they push it to the next year. Thursday, April the 15th, for all of you that need to make estimated payments, Q1 2021 estimated payments are due on Form 1040 ES. There are two sets of dates. If you're self employed or you're a farmer or a fisherman, they're due quarterly. So, once again, April the 15th. But if you're an employee who earns tips, you pay monthly instead of quarterly, and that's around the 10th of each month. All right. Office protocol. So, yes, for those of you who may actually come and see us in the office as we battle COVID 19, we encourage everyone to utilize the portal to submit their documentation. We do have a new process as we work to improve our customer service and delivery times. This is one area that I strive to be very good at in terms of our delivery, but I will admit that I fall miserably short. We are still catching up from 2019. Um, 2019 tax returns that would have been filed last year. So we're working a different process where we will start the tax preparation of a return once we have three things. So a completed organizer, which we've sent the links to, we can get you that. All the documents have been either provided in person or via our portal, and then the client sends communication to us. The preferred method is via a portal message, just saying that you're ready to go, okay, or that hey, everything is uploaded, I'm ready to begin. When that happens, we are starting a 7-day turnaround clock. That's what we're trying to do, okay? So from the day we get that email saying, hey, all my documents are there, our staff is working a workflow to try and turn that around from start to finish to you in 7 days, okay? I'm crossing my fingers I can do much better job than what we've done in the past, which has sometimes been weeks or months. But once again, always striving for perfection. All right. If discussion or review is needed about your return, we can either set it up with a phone call or a Zoom conference, kind of what we're doing right now. We are planning to limit in-person visits to drop-off appointments only. However, for those who do not have access to the necessary technology or absolutely need a face-to-face appointment, they can just contact the office and we can schedule accordingly. Okay. Social distancing protocols, all that good stuff will be in play. All right. Once again, want to keep everybody safe. 2021 office staff. So we do have some staffing changes. So Jennifer Stiles is retained and still here as our administrative assistant. So when you call me and you try and reach Jared, and Jennifer's pleasant voice answers, and she can handle everything from getting you on the calendar, setting up a call time, setting up a return call, any of that, password resets, portal information. Jen knows it all. Okay. Tabitha Groves joins us with approximately 15 years worth of experience from combination of H&R Block and other services, both here and in Tennessee. So we're happy to have her joining us this year. She is our lead preparer, so she will be handling a yeoman's load of returns. All right. Rain Shamoun rejoins us or is retained as our tax preparer too, and she's also slash reviewing now. So she is reviewing the work that is being done by some of our staff. Robert Thompson Jr. He now joins us as a tax reviewer. So what you can kind of see is we are attempting to move more into the organizational structure of a company instead of everything running through Jared and Jared being the bottleneck. Part of the reason why it takes so long to get the returns is because Jared would review everything, and now we're putting in a mechanism and a process. Don't worry, I designed it, so they're going to review the returns the way I would review it. But we're putting in a process now so that the reviewers can actually review it and we can actually move this along a lot faster. Okay. And then David Burness is on with us for, he was not here doing, well, he was technically because tax season didn't end until July 15th, but he's here as an intern, and he'll be going through his first live tax season with us, but he worked last year as he works to finish up his studies at St. Xavier. So David will be here, and we got a full house. All right. We when Jared sent the email out about the organizers and everything, I realized that I didn't send anything out about pricing. The packages largely remain the same. They're just slightly indexed for inflation. These are the gross prices for the packages. Once again, the incentives that you all receive in terms of filing, when you file, the first discount was $45 if you started or began the process before Valentine's Day. The next gate change is March 15th, and that's $35 off. For those of you that are members of, various affinity groups, those of you that are below certain income levels, those discounts are still in play. Okay, so once again, standard, intermediate, advanced, everything's in play for this year. All right, so this, just re-highlighting it, we mentioned last year that we were going to do extension surcharge pricing. And what does that basically mean? It meant that returns that went on extension that weren't completed by June 1st, we were basically going to remove discounts and they were going to face an upcharge. Okay. Last year, because the IRS moved the deadline, we felt that that would be very unfair. So we just kind of did away with it and said we weren't going to implement it. And you may be saying, okay, well, I'm not understanding what's the point of, a return being upcharged if it's not done by June 1st. Well, as I mentioned, we kind of get really, really busy after March the 1st. We wound up with, I don't even remember, I think it was like 150 something returns on extension. We're set to do returns during season. We're not at the point where I can keep staff on all year. So when returns get pushed out to like September and October, and I'm the only one here, or it's just me and Rain, that puts a lot of pressure on us, to get things done, which is part of the reason why I get yelled at once again, because I can't do 90 returns in 60 days. So what we've said is, hey, get the returns to us. If you put it on extension, let's kindly complete the process, so that we can get you filed. But for those that like to push the envelope and drag it all the way out into the end of it, unfortunately, we're trying not to be in that business anymore. Okay. Now, only delays that are caused by extenuating circumstances. We had several people that lost their jobs, unfortunately, due to COVID. Several people that may have actually had symptoms. I had one client who I learned yesterday was actually in the ICU for 2 weeks. We're not going to surcharge you for things like that, okay? But basically, complete the returns as timely as possible. Okay, and let's get into the tax component of this. All right, so standard deduction for 2020, you have on your screen the various filing status. So, single and married filing separate is 12,400. Married filing joint qualified widower 24,008, and head of household. If you have a dependent who earns, who maybe has a job, maybe a student, something like that, their standard deduction is the greater of $1,100 or $1,100 or their earned income plus $350 up to the regular standard deduction. So if you have a child that earned, you know, I hate doing this. Call it 12,600. Okay, if they earn $12,600 worth of income, their standard deduction is their earned income plus 350 up to the regular standard deduction. So technically, that person earned income plus 350. So they would have only gotten up to the standard deduction of 12,004. So they would have $200 worth of taxable income, and they'd have to pay tax on that. Okay. Um, this is the thing where sometimes there's some confusion where people will say, "Oh, I need to itemize," or "I don't need to itemize." So basically, until the total of your medical expenses exceeding 7.5% of your income, your state and local taxes, meaning the income taxes they take out of your check and the property taxes you pay on your home, not on your rental property, okay? That goes on a different schedule. The mortgage interest and the PMI and the charitable contributions that you made exceed the standard deduction, you just simply take the standard. The IRS allows you to take whichever is higher. Once the total of those items exceed the standard, for your filing status, then you will itemize. Okay. So just throwing out these numbers. So for some of you, if you're like, hey, do I need to go and tally up all my medical expenses? Do I need to go and add up all of my charity? Well, if it's not going to be more than your filing status, then maybe not. Now, you can still give it to us and we'll look at it. And of course, we're going to make the decision to do whatever is most beneficial for you. But just be advised, sometimes it's like, well, I had medical expenses. How much money did you make? I made $100,000. Did your medical expenses exceed 7,500? Out of pocket? Yeah. No. Then don't worry about adding all that stuff up. Okay. Moving right along. Charitable contributions. So new for this year, because 2020 was such a train wreck um, on many fronts. But because 2020 was such a train wreck with regards to people losing jobs and charities, um, plus the fact that the standard deduction is so high, um, if you, many people, not many, some were disincentivized to actually donate to charity. I understand some people give out of the goodness of their heart, but some people also give because I get a tax write off. Okay, fair enough. Well, with the standard deduction being so high, people would say, well, I'm not going to give because I'm not going to get a write off for it. Well, in 2020, for an individual could have given up to $300 of a charitable deduction, and they can have it be deductible without basically having to worry about their AGI and without having to itemize. Okay. So I think I gave like right around the $300 mark. I can actually include that on my tax return without having to itemize. Okay. So just keep that in mind, but it's only cash, not goods. If you gave to donations of goods to, Salvation Army, Goodwill, any of that stuff won't count. But like if you gave to, Greater Food Depository, Salvation Army, any 501c3, you made a cash contribution, you don't have to itemize and you can get that write off for 300. It is on our organizer. I know we ask about it, but just keep it in mind. For those taxpayers who actually do itemize, you may have been aware that, if your income was a certain level, then, your charitable deduction was limited to 60% of your AGI. Okay. And what, what has now happened is they've lifted that and the contributions are increased to 100%. Okay. So, capital gains. For those of you who have cap gains, short term cap gains are always taxed as ordinary income. And since the tax brackets which apply to ordinary income, change every year, the short term gains could be taxed at different rates, than in prior years. But what I did want to give you is long term gains. So basically, short term gains, long term gains, they are used to net and offset one another. And the net of that is then taxed, okay, based off of either a 0% rate, 15% rate, or a 20% rate, all right? And it's based off of your taxable income. So somebody who is single and has taxable income of less than 40,000, they can have they can literally have $50,000 of long-term capital gains, but because their ordinary rate is below the 40, they pay no cap gains tax on it. So, not that you can do this now. This would have been a tax planning strategy. But if there was a bunch of stock that you wanted to sell, and last year was not a good year from you, maybe you lost your job, and your taxable income was lower, that would have been a year to sell a lot of stocks at gains, because you could potentially have had them taxed at a lower rate than if you were, a year where you're earning $441,000. They're going to be taxed at 20%. Okay. But just be aware that, the cap gains rates are 0, 15, and 20, and they're largely based off of your ordinary income. Okay. It is too late to sell any of the stock and have it count for last year, but the thought process that I just spoke of potentially having reduced income, if you are looking to dispose of stock, that's something to consider for 2021, which we will be filing next year. Okay. All right. Another COVID related provision, and I guess I kind of forgot to mention this in the beginning. This is part of the reason why tax season didn't start on time, was because those things were still being ironed out and put into the system for the IRS. One such thing is what was known as a lookback provision, okay, and as it relates to the earned income that one made in 2020. So what does this mean? Okay. So effective for 2020 only, and solely for the purposes of calculating either the earned income credit and the portion of the child tax credit that is refundable. If your 2020 earned income is less than 2019, a taxpayer could elect to use his or her earned income for 2019, the 2019 tax year, rather than their earned income for the 2020 tax year, if it would result in a greater credit. Now, I know you just say, okay, Jared, what does all that mumbo jumbo mean? All right, let's walk through an example. Okay. So the earned income credit is given usually to individuals who, lower income in comparison to other taxpayers, and they have a dependent, okay, somebody that they're caring for, children, one, two, three, someone. And with that, you have to make below a certain dollar amount, and then you have to have a number of dependents, and it's an interplay between the income and the number of dependents. Okay, and you can even be a person who's single, doesn't have any children. As long as you're below that threshold, you'll qualify for it. Well, but you have to have earned income. So what if you got laid off at the beginning of the year, or maybe you were going to work a seasonal job that just never materialized? Okay, your earned income this year in 2020 could have been zero, but you had earned income last year in 2019. All right. Well, in that particular instance, what the IRS and what the legislature said was, if using the earned income from the prior year would have resulted in you having a larger earned income credit or receiving a larger child tax credit, you can use the income from last year. Oh, okay. So if I earned zero income this year, I would have zero for the earned income credit. But if I earned $15,000 last year and it would have given me a larger earned income credit, I could use last year. That's exactly what it's saying. So if it doesn't apply to you, you can pass it on to your friends. But here's the thing: the preparer needs to know what the last year's income is. We know this for all of our existing clients, and then for new clients, this is why we always request a copy of last year's tax return, so that we can say, hey, this is what last year looked like, and we can incorporate that. So for the earned income credit only and the refundable portion of the child tax credit, there's this look back provision. Okay, so just highlighting that. Stimulus checks, aka economic impact payments. Nobody knows them as EIP other than us in the industry. Everybody knows them as where was my stimulus check? Okay. There's a very important thing that's going to happen on your 2020 tax return. No, the income is not taxable, but we do need some information from you. Okay. So, effective for 2020, individuals can qualify, or they did qualify, for up to either $1,800, and married filing joint couples qualify for 3,600. So for the individuals, it was a 1,200 and a 600, and then for the married filing joint, it was a 2,400, 1,200, and then you got up to just must have been 550, 550 for each qualifying child. Okay, those were the stimulus checks, and we're not talking about what Congress is potentially talking about doing wave three. That's what everybody was given, or potentially was given, because if your income was phased out, next point, your AGI was too high, it was over $150,000 for married couples, 112,000 for basically those that had a household, or 75,000 for all others. You didn't receive any of it. Okay. Um, Now, what this the 2020 tax return does is, if you did not receive your payment, okay, or if you did not receive all the payment you were entitled to, then you actually can get it on your 2020 tax return, which is why it's so important for everybody to file a 2020 tax return this year. Because if you didn't get your stimulus, you can get it as a refundable credit, which is known as the recovery rebate credit. Okay, so the credit is reduced by any of the first or second round impact payments that you received in advance, and you should have received a notice, 1444 or 1444B. So 1444 was for the first round. 1444B is the one that's actually still potentially being distributed now. Okay. Um, on the organizer, we ask you, did you get the stimulus? And if so, what were the dollar amounts? Because here's the thing. Let's say you got you got the right amount of stimulus, but you had a child in 2020. Well, you didn't get the 550 for the dependent, okay? But you're entitled to it. You can get it on your 2020 tax return, okay? So, my smiling face without a mask doing the thumbs up. That's from our YouTube channel. So many of you have subscribed to it. Many of you comment on, seeing the videos. But you can always go to youtube.com/C/Wilson Rogers and Company Inc. In this, we talk about, in that video, and any video that I'm dressed up with a shirt and tie, that's tax chit chat. That is specifically a tax related video. Our other series is Minding My Money Mondays, and that just talks about everything money related, saving money, spending money, investing. But we did a video on how to claim your recovery rebate credit. And the important thing, which is the last point, which is in red, is that the economic impact payments, or AKA the stimulus payments, are not included in the taxpayer's gross income. They are not taxable income. But if you didn't receive the correct amount or need to receive additional, or if your situation changed, maybe you were dependent in 2019, but in 2020 you're no longer the dependent of your parents and your income meets, you may qualify for the credit, or receiving it. So everybody should make sure that they file this year, even if they think that they normally wouldn't have filed. Some of my seniors would say, well, I don't file because my social security, is not taxable and I don't make enough, so I never had to file a return. But you can still file and get your credit. Okay. So, all right. For my business folks out there, PPP loans. What is a PPP loan? PPP loans were Paycheck Protection Program loans administered by the SBA. So, just like there were provisions to help those on the individual side, there were provisions to help all of our businesses. Now, the Paycheck Protection Program is not the same as the SBA disaster loans or the EIDL loans. Those are different. Paycheck protection loans they're literally based off of somebody having either payroll or working and having self-employment income. So those are the you that receive 1099s and file a Schedule C. That's what this, related to. So the SBA did this, administering these loans to, employers to help them keep their employees on their payroll while their businesses slowed down or were shut down during COVID-19. Now, everybody by this point in time mostly knows that, those loans could be forgiven if the certain conditions were met. And it was basically the 60% of the loan given had to be used to pay for payroll, retain employees, and then the other 40% had to be used on basic, operating costs. Um, Everybody was concerned about some legislation that went out at the tail end of last year, and then the legislature provided additional clarification, and the IRS was aligned with them, and that was that the amount that would have been includable in gross income, because usually if you have debt that's forgiven, you have to include it in income. So if you have a mortgage that gets forgiven, usually you have to include it in income, unless there's an exception. There's always exceptions in tax, but any of that income that was supposed to be includable in gross income is actually excluded from gross income, okay? As long as the provisions are met. So PPP loans that are forgiven do not have to be included in income. And the IRS is allowing you to deduct the expenses even if they are paid with loan proceeds that are forgiven and excluded. That's usually not the case because that's a double dip. You can't get free income and deduct the expenses, but as it relates to COVID and trying to get people back on their feet, they've altered it. Okay. The most important thing that's been keeping us busy, busier than a no-legged person in a snow shoveling contest. And if you saw my social media post from yesterday, you'll know what I was talking about. My nice, lovely "You Are Loved" carved into a mound of snow. But the second round of PPP loan funding is now open, and the deadline for eligible borrowers is March 31st. So everybody is trying to get tax returns done. Everybody's trying to get these applications done, and this is not a normal part of our tax business. Um, but because we do books for people, people are trying to get their books done. People are trying to get their tax returns done because one of the requirements is you either have to give them books or you have to give them a completed tax return so that you can get funded. And you also have to show that you had a year-over-year decline of 25% more in revenue, and that you had people on payroll, and that you ran payroll. So um, we're busy because we're getting a lot of activity because everybody's trying to hit the deadline. Okay. All right. So that is my business, folks, and your PPP not includable in income if forgiven, and you can deduct the expenses. All right. Unemployment benefits. What does this have to do with me, Jared? This is taxes. Well, maybe you received unemployment benefits. And maybe you're wondering, do I have to do anything with that? The short answer is yes. Okay. Um, what you see on the left hand side is a nice little breakdown from the US Chamber of Commerce of the 20.5 million people that were unemployed and what areas were primarily impacted. So 39% of 20 million people were within the food, travel, and events sector. 15% were in services, 12% in retail, and then you have medical providers, education, and other. Yeah, flights, Disney, cruises, you name it. I used to work for Hyatt. I can't tell you how many people that I know from my former life that are no longer in hospitality because the industry was literally just decimated. I think I was driving in recently and I heard that, what is it, New Orleans? They were talking about Mardi Gras Fat Tuesday. I think I got this story right. They were saying that after the holiday wave, that they had gotten occupancy levels, meaning the occupancy percentage of the hotels, up to about at a high point, maybe 50%. But occupancy levels have been hovering around like 20% or less. When I was working in hospitality, a good healthy occupancy percentage was about 70%, 80% non-event. So hotels are struggling, owners are struggling, everybody's struggling. All of the staff that work for those hotels are struggling, and the federal government kicked out additional unemployment benefits. Well, if you didn't know, unemployment benefits are taxable, and this includes both the basic state benefits that people received as well as the extra $600 of pandemic benefits. Okay. Anybody receiving unemployment benefits should have received a Form 1099-G showing the amount that they were paid and any federal or state income taxes that you had taken out. We would need that. Okay. So if you got unemployment benefits, yes, we need the 1099-G so that we can include it in income. Otherwise, you're just going to get a nasty letter from the IRS, about March of next year once they finally match everything up. Okay. If you didn't get a 1099-G, you can go to your state's unemployment compensation website and access it. Here in Illinois, it's uh, mytax Illinois, or Illinois my tax. I can't remember. It's been a long day. But needless to say, my tax Illinois. You go there, you can retrieve your 1099-G off of the website. All right. But that brings me to my next point, which is unemployment fraud. Okay. So yes, I'm back again with another video. This one is not tax chit chat because I got on a sweater, so this must have been mine on my Money Mondays. Um, what you see in red, IR 2021-24, that's in the Internal Revenue Bulletin. It was an Internal Revenue Bulletin that just came out on January 28th, in which the Internal Revenue Service, urged taxpayers who receive Form 1099-Gs for unemployment benefits that they didn't actually get, to contact their appropriate state agency and get the corrected form. So here's the thing that some people don't realize or recognize. Whatever federal forms you get, the IRS also got. So you get the W 2, the IRS has a copy of that W 2. If you get a 1099G and you didn't get unemployment benefits, the IRS still gets it. And they still think they're still expecting you to report that on your return. We've had a lot. Wait, I've never had this much UI fraud, unemployment insurance fraud go on in any given year ever. We had claims filed against us for fictitious employees, and I'm like, what? I'm like, I don't even know who this is. Like, what are you talking about? Um, one of my biggest bookkeeping clients, who does very very well, um, had a claim filed against them, and it's just kind of like, wait a minute, why would this person fire themselves to collect unemployment? Doesn't really make sense. It was fraud. Okay. So the state issues a 1099-G to a taxpayer and to the IRS to report the taxable income. But if you didn't get it, you're like, well, wait, what am I supposed to do? And I didn't get a corrected form. You know, the taxpayers who are unable to obtain a timely corrected form from the states should file an accurate tax return reporting only the income they receive. So don't pick up the bogus unemployment comp. Okay. And then you should request a corrected Form 1099-G showing zero unemployment benefits, in cases of identity theft, because that's going to help you when the IRS later on says, why didn't you report this? You can say, listen, this was the corrected 1099-G. I didn't get any benefits because the IRS will also get corrected 1099-Gs. Okay. Um, so once again, I did a YouTube video on dealing with UI fraud. That video actually did really, really good because there's a lot of people that it's impacting, and there's several links within that video that tell you to go to the Federal Trade Commission and how to deal with the fraud actually occurring. All right. So retirement plan distributions. Um, so in the case of a coronavirus related distribution, wait, Jared, what is a coronavirus related distribution? Once again, federal aid. So the legislature, Congress, etc., said if you are on hard times for this year between January 1st, 2020 and before December 31st, 2020, you could take out up to $100,000 out of your retirement plan, 401k, 403b, any IRA, any of it, without being under the age of 59 and a half, and certain things would happen. So if you took a coronavirus related distribution before December 31st, so within a year, then the following provisions apply. The distributions from the plan are includable in taxable income, and it can be done ratably over 3 years. So you don't have to pick it all up in one year. That's work for me to do, really. But it can be spread across 3 years, beginning with the year of distribution. So what this means is, like, if you have it this year, your income was lower, you don't have to pick it all up. You can pick up some of it, and then it's not necessarily going to throw you into a higher taxable bracket because you're not picking up the full percent. If you are below 59 and a half, then the 10% early withdrawal penalty doesn't apply. Okay. And let's say you took the money out because you freaked out, and then it turns out I actually didn't need the money anyhow. I didn't lose my job. I was good. Taxpayers could recontribute any portion of the distribution during the 3-year period, beginning the day after the day. I love this. Beginning the day after the date on which the distribution was received and treated as a tax-free rollover. What? Beginning the day after the date on which the distribution was, meaning you could have took it out on Monday and put it back on Tuesday, and you're good. Okay, and it doesn't count. It doesn't count. It's fully repaid, because as it gets repaid, there's an interplay between the taxes that you would have had to pay and not pay, um, you know, etc. Maximum loan amounts are increased, and repayment due dates are delayed 1 year. So if you did take a coronavirus distribution, those repayment dates are kind of out there. All right. All right. What else do we have? Educator expense deduction. So for all of my elementary and secondary school teachers, you already know that you're allowed to deduct up to $250 of unreimbursed classroom expenses as an above the line deduction. Um, those of you who maybe had to pay for aids and things like that because you were doing remote learning, a lot of us were doing remote learning. You're allowed to do that, but effective for expenses paid or incurred after March the 12th, Your educator expenses could also include the cost of PPE, disinfectant, and other supplies used for the prevention of the spread of COVID-19 in the classroom. So, if you were in a jurisdiction in which you actually were in school, my daughter is actually in school right now. She's face to face. Um, But if a teacher has to pay for, disinfectant or PPE, they have to wear masks, they need extra stuff that is not being covered by the school, that is now a deductible expense for the purposes of an educator. Okay. And places like Illinois still give educators a separate credit for their education expenses. There's a lot of differing between federal and state on certain things, which means that our job here in the office is harder. But guess what? That's if it yields you all uh, greater tax deductions and benefits to help you all as we all struggle and get through this, craziness that we've got going on. Then hey, so be it. I'm gonna say we'll do whatever we need to do, and we're keeping tabs on everything to make sure that everybody does get the maximum amount of deductions possible. This particular tax year. All right, getting towards the end of this. So, and I'm actually fairly on time. I said it was going to be 45 minutes. Extenders. So there are some extenders that are still in play. So taxpayers can still deduct, unreimbursed medical expenses, um, on that exceed 7.5% of their 2020 adjusted gross income or their AGI. That threshold was set to increase to 7.5% to 10%, but that reduction was permanently passed. For tax years beginning 2020, volunteer firefighters and medical responders will be able to exclude payments provided by state and local governments for performing emergency response from their income. That exclusion is permanent. If you experienced a foreclosure, short sale, or loan modification, you may still be able to exclude the amount of debt forgiven on your principal residence on your taxes if certain conditions are met. Basically, meaning if you've lived in the house for X amount of years, out of X amount of years. Um, the ability to write off mortgage insurance premiums, which are included in the mortgage interest deduction, was extended through 2021. And the credits for non-business energy property improvement, so basically like energy efficient credits for your home, they were extended through 2021. It still allows you to claim a credit for up to 10% of the amounts paid, but there still is the lifetime cap of 500. Okay. All right, my friends, thank you very much for joining us. As always, it's been a pleasure. So I do hope that you did get something out of it. Once again, the replay will be up and active. We are in office. We are working. We are looking forward to helping all of you all. Jared's looking forward to hopefully trying to get these returns done faster this year than we have in the past. I'm going to tell you all to enjoy your day, and I will see you all next time. Have a good one, everybody.